This is Mike Hoffman with Arizona Benefit Plans. Wanted to take about 15 minutes and do some Q&A with Molly Kelly here based in the Phoenix market. She is the mid-market marketing person for National General. So that's code for the 50 to 500 group market. As you know, Arizona Benefit Plans has acted as a general agency for National General for quite some time. And I thought it'd be good to just do 15 minutes with Molly, basically, and kind of talk a little bit about National General, the opportunity, and why you'd want to use it. We're going to record this, obviously, for posterity and share it with agents that maybe couldn't join us today. So why don't we get started, Molly?
Sounds good. Thanks,
Good.
Mike.
So, Molly, I hear you're an Arizona native. You've been 2 years with NatGen. Prior to that, you were actually on the agent side of things.
Yeah, that's right. So I've been with NatGen this summer, will be 2 years, most of that time spent in the mid-market segment. And then I was on the agent side for about 3 years or so prior to coming over to NatGen.
Fantastic. Well, so give us a little overview of who NatGen is. National General, of course.
Yep. Yeah, so we are a level funded and self-funded group health carrier, primarily serving kind of the small and mid-sized employer market. So our goal is really to take some of the strategies that have historically really only been accessible to large groups, self-funding, reference-based pricing, kind of scale those strategies down, make them accessible to mid-sized employers.
So
we've been in the self-funded space for almost 20 years. So we have a ton of experience under our belt in this market space. And we've really kind of been the leader of the pack with a lot of these different products that we'll chat about today.
Yeah, that's great. So National General has a long history of being in the group insurance market, right? It started as the original Time insurance company, then Assurant, and then National General bought the Assurant block of business. And you now have a new parent company.
Very exciting. Beginning of this year, we closed an acquisition with Allstate. So now we're National General, an Allstate company, which just brings additional brand name recognition and financial backing to us. We are A+ rated with A&M Best, insuring well over 4 million people across the nation.
Yeah,
growing and growing.
That's fantastic. So if you're going to look at the product portfolio that you'd bring to the table in the over 50 market, kind of give us what the bucket of product availability looks like from your side.
Yeah, we do have quite a bit of flexibility. We're writing both level funded and partially self-funded products. And we have a variety of different contract options and network options as well. We really want to give the agent and the group a lot of control to choose between the contract type, the amount of risk you want to take on, and kind of in turn the amount of savings that you can realize.
So talk about the value proposition, right? There are lots of people playing in this 50 plus space. You got the Aetnas, the United Healthcare, Blue Crosses, just about everybody says they want this 50 to 500 business, and just about everybody's got some form of alternate funding. So what's the value proposition? And then tell us a little bit about how you underwrite this stuff.
Yeah, so there's kind of 3 major things that come to mind for me. First being the alignment, that we are bundling everything together to kind of put this in a nice bow for clients. And National General is fully integrated. We're the stop loss carrier, the reinsurance carrier, and the program manager here, which means everyone's on the same team. And when you pair that with also working with an independent TPA who's really serving the client as well, everyone's very aligned in putting the client's interests first. And then between everything we're doing in terms of product flexibility, we're giving a lot of transparency and control back to the group and the client as well. I think when we're talking about things like reference-based pricing, having a model where your stop loss carrier and your program manager are the same, it means there's no headbutting happening there. And that is really valuable for us. And then we're working with a lot of different strategic partners in terms of Allied on the TPA side, Cigna on the PBM side, and giving kind of full access to data and transparency throughout the year as well. In terms of underwriting, that's going to vary a little bit depending on what we have access to with the group. So if we have access to experience data, we would need large claims data, monthly data for at least 12 to 24 months. We'll medically underwrite the group. That's the ideal situation, right? But when we don't have access to that experience data from the current carrier, we can't get a good risk assessment on the group, we will go down the path of medical questionnaires for firm rates in order to give, real risk assessment of the group and a firm offer.
Got it. So you guys were an early adopter of the reference-based pricing strategy, especially in the small group space. You've clearly adopted that to the 50+ market. But tell the folks listening what differentiates you in the reference-based pricing space than everyone else.
Yeah, there's a couple of things that we're doing differently that'll really make us stand out in that space. One of them I already mentioned, it's being really aligned on the same team and integrated in our solution, with us being both the program manager and the stop loss carrier. That removes any headbutting that can happen there. On top of that, we have a really, really strong success rate. So we're paying on our reference-based pricing solution either 150% or 130% of Medicare reimbursement, just depending on if it's an inpatient or an outpatient claim. And we have a 97% success rate. So only 3% balance billing. That's really, really good. And members are completely protected from balance billing responsibility. So all they have to do is let us know they got it. We're going to take care of that. We've done that 100% of the time. So kind of along with that thread, I think that we have an extremely member-centric model, right? We're using negotiation tactics, never litigation. We're really protecting the member. We're putting their access to care and their experience on the plan first. And I think that really separates our model from some of the others out there.
Yeah, very good. I think the idea that you guys, for practical purposes, do a guaranteed no balance bill program to the employee is really different than what a TPA administered program can do, and all of the infrastructure that you guys have put behind all of that. So your reference-based pricing program should definitely be looked at, especially where there's data available and you guys can experience rate the case. Talk a little bit about how you support the member and the group from a technology standpoint, onboarding, offboarding, all the administration, and who does all of that for you?
Yeah, so some of that is going to be done through the National General Support teams, but a lot of it is going to be run through the TPA Allied. We're going to give online access to members, so they'll have a portal with Allied where they can pull up digital ID cards, plan documents, all of that good stuff. And then if we are using our reference-based pricing model, we also have a member advocacy program that's really like your white glove concierge service for members. That's the go-to for provider questions, plan questions, education, balance bills, kind of you name it, that team's available. And I might be biased, but I would argue that our member advocacy team is really the best one out there.
Got it. As you and I have talked, you have all kinds of different stop loss contract bases that you can bring to the table. Can you talk a little bit about that, and then kind of talk about what's the prospect? Who's the best fit for this platform? Who are you, if you're sitting in front of an agent? Who are you saying is the best fit for this?
Yeah, so in terms of the stop loss contract, I think this is one of the coolest things that we're doing is what we're doing in this space. We do have a 1221 contract, right, with your run out built in, but I really love showing employers our 1212 contract. The renewal contract on the 1212 does protect the group's claims, but we also give them the option, a terminal liability option that they can trigger and pay for just when they need it. So they're purchasing the 1212 contract up front. Renewal contract gives full protection, and we're building in that 6 months of run out protection right away. So they know what to expect from it, but they get to retain the cash flow in their pockets, lower their fixed costs, only pay for that run out protection the one time that they actually go to use it. So not just is the employer getting the upfront savings, but because we're lowering upfront costs, they're going to realize year-over-year renewal savings as well. So it takes a little bit of extra education to an employer with that upfront, but I find that employers really, really like going that route because it's a little more flexible for them.
Yep,
and then in
absolutely.
terms of kind of clients and who we really want to go after, we don't have any industry exclusions at NatGen, and we can do a lot of sort of niche stuff in terms of writing startups, 1099 only, all sorts of different things, carve out groups. Where I find our wheelhouse in terms of group size tends to be is about 50 to 250 enrolled in mid-market. That's really an ideal space for us. That's where most of our clients lie. But I would say that at the end of the day, the most important thing isn't a particular industry or particular policy that they're on now. It's kind of the attitude and the mindset of the employer. Ideally, we want an employer that's a little more progressive, that sees that benefits is their number one or their number two spend right now, and they really are looking for an effective strategic way to curb that cost, not just for this year, but for all the subsequent years as well, right? And an employer that's looking for that type of solution and sees that is a really, really good fit for us.
So last question, kind of talk about footprint, where you can go, where you've been having good success, and anything else, and then we'll have used up about our 15 minutes here, 15 minutes with Molly.
Yeah, I can write all over any state but Hawaii. We will write in. So even if you have groups outside of Arizona, they can still be a really good fit for us. I do tend to see that we have a lot of success with groups where we do have access to experience data because it takes out that medical questionnaire kind of legwork up front. Groups that are level funded already can also be a really good fit because they already understand level funding, and then we're just educating on reference-based pricing, right? But certainly we look at all types of clients. Those are just where I tend to see us having a lot of success right now.
That's fantastic. Well, Molly, one, thanks. Just from our perspective, we think with your network lineup, because you have access to both Cigna and the Aetna network, and then your reference-based pricing strategy, that you bring just tremendous depth to this space. And especially as the market kind of matures and more people are being level funded and there's data available, especially like the Cignas and the All Savers and the Aetna level funded program, just way more flexibility, frankly, I think, with your platform. So we look forward to encouraging agents to look at the platform. Thanks for spending a little bit of time. To the agents that are watching this video, we hope you got a little taste of what National General can do. And we'll see you as we start doing some quotes. Thanks, Molly.